Kia ora, good morning. Happy Tuesday the 2nd of June, just after Queen's birthday, which means we have 143 days, I counted it earlier, until our next nationally scheduled long weekend, Labor Day. Yeah, unless of course someone somewhere adds one in between now and then, maybe. Yeah, I'm Mike from Markets, this is Kiwibank Markets in a minute. Okay, starting locally with the currency, the New Zealand dollar, it is higher, 62.98. That is the top of the long weekend run, and that was just a few moments ago. So it may be higher again by the time you watch this. But yeah, we are knocking on the door of 63 cents right now, just around 7 a.m. More or less 100 points higher than where we left things on Friday. Yeah. So drivers of that rally, the usual suspects really, broad US dollar weakness, so bit of a win by default there. We had some better than expected Chinese data yesterday, and what's good for China economically is usually good for the NZD. And global equity markets, they are continuing to eke out advances, and yeah, where global risk sentiment goes, if we measure it by equity performance, the NZD tends to follow. Yeah, the icing on the kiwi cake, that's probably our comparatively stellar performance on the COVID-19 front. As drivers go, though, yeah, that one is very much the icing. It might even be the sprinkling of icing sugar on top of the icing. It's marginal at best, at the moment. Anyway, yeah, that's the moral of that story. Looking at the bigger currency picture, though, the Kiwi, it outpaced the yen and the euro, so gains in those crosses over the weekend. Broadly on par with the pound, and it did struggle to keep pace with the Aussie dollar, the AUD. Yeah, so the Aussie was a bigger beneficiary of that Chinese data, amongst other things. Yeah, it just had a better weekend performance. So the Aussie, Kiwi Aussie, that said goodbye to the 93-ish level that we became accustomed to last week. It's back down in the mid-92s. Yeah. Just on that Chinese data, if you are interested, it was a private survey of the manufacturing sector, and it had the nation's factories moving back into expansionary territory. Yeah, a continued contraction was the expectation going in. Yeah, not doing very well after a long weekend. What else? Oil. That is a little higher, which is supporting equities. And Kiwi interest rates. Kiwi curve, that is also a little higher. Another reason for an elevated NZD. You can never have too many, I guess, reasons. Yeah. Okay, that'll about do it. Looking ahead, yeah, we have an RBA interest rate announcement this afternoon. Probably going to be fairly uneventful. Before that, though, you will see First View hitting your inbox later this morning. Much more eventful. It's event-filled. Literally, there's a table at the back with this week's big economic events listed. Yeah, and awesome content too. If you don't get that directly to your inbox, maybe let us know. We can hook you up there. Okay, I've gone on long enough. Have a great Tuesday. Kia pai tōna.